Good morning and welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite, we have Richard Rosenblum. He is the co-founder and head of GSR. We're going to focus on creating standards for the digital asset class. Thank you so much for joining us at MarketSite tonight. Now, tell us about the Association for Digital Asset Markets, or ADAM, why it's a first of its kind, and who are you going to be working with?
Sure. So ADAM, it's an industry body, and it's made up of companies that all have a vested interest in growing confidence in digital asset markets. And we've been engaged with regulators, with many of the largest financial institutions in the world, with legal scholars, and dozens of different active digital asset market participants. And as far as the 10 founding members of ADAM, there's other market makers such as GSR, as well as companies that are involved in brokerage services, as well as a company that hosts a marketplace for trading, and another company that's in blockchain technology that creates smart contracts.
Why is it important to be proactive and create standards for digital assets?
So one way digital assets are different is that, say, typical ways that an emerging asset class would come about would be through the institutional level. And there would be institutions that are creating services that would be up to institutional standards. And they'd fall into the purview of a particular regulator who would register them and make sure they're all up to snuff. Versus with digital assets, it emerged as a retail product, and within retail, it's not clear which of the regulators is going to be something in the purview for. So the service providers that have created products for digital assets haven't necessarily been up to institutional standards. So why it's important is that we'll have a way to codify standards so that we know that these retail players that are involved so far are going to be creating products that are up to institutional standards. Otherwise, we have institutions that are waiting on the sidelines, scratching their heads, and they don't know how to navigate the space. But once we have all these standards in place, it'll both give an ability for the institutions to come in and trade with confidence, and also be a safer place for these existing players.
Right. Well, it's no secret that the challenges to institutional adoption for digital assets, transparency, custodialship, those seem to be two of the key issues there. Will future guidelines help investors warm up to the idea? Is that what ADAM's going to help institutional investors and regulators and the market makers and exchanges do when they codify this system?
Absolutely. I'd say the main way it's going to help is on the education side. Once the standards are there, the investors are going to know, what to expect out of these marketplaces. If the marketplaces have to post the rules, that there's no wash trading, and you have to have a certain way to trade, to clear, to settle, that's going to make the investors know what to expect, and they're going to only trade on the exchanges that are up to these standards. So it's going to be a safer place for them to trade. They can go in with more confidence. And also, I think that just for efficiency's sake, having all this information in one place is going to simplify things, make it more efficient. Currently, even if you speak to one of the top lawyers or compliance consultants in the industry, there's still some confusion, whereas if you have it all on one website, one document, it'll be much easier for people to figure out what's going on in the space. Right,
because it certainly is fragmented. But to wrap up here, equity market structure, it's 200 plus years old. It has evolved significantly. It's going to continue to evolve. Is it a one-size-fits-all model? Can digital assets function in an equity market structure, or is it something that has to be specific to that asset class?
It's a good question. There's certainly some similarities to equity markets, but I'd say there's two reasons why it's a bit different. The assets themselves are a bit more complex. Many of the projects are open source format, so the technology underlying them are in a state of change, and they could fall under one purview of a regulator, but then switch based on the change of the state of the project. Another is that they're easier to transfer. In the same way, you wouldn't be as likely to send me Apple stock due to the way it's regulated, but there's some currency-like properties to many of the digital asset projects, and that creates some more problems such as cross-border regulation. So I'd say even though there's some similarities to equities, I think that it's going to be even a harder evolution and a harder thing to track over time. So it's going to take more work. It'll take several years, but I'm sure eventually it'll get there, and we'll have just as fair and orderly markets in crypto as there are in equities.
All right, thank you so much for joining us. Looking forward to updates out of the association. And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.